Oftentimes, when I'm talking with buyers who are sitting on the fence, it really comes down to one thing. What is my monthly payment and what can I afford in our market with that monthly payment? And I can tell you, it's not often that I find a buyer has an unreasonable budget in our market and we can find nothing. It's just a matter of educating them. And so there is a lot of talking about what their needs are and how we've come to this number of comfortability. I always make sure my clients know that I do not want them to feel house poor. I want them to feel excited about buying a home. I want them to get in that home and feel they have truly made a great investment and that they are comfortable month to month to where they can go out and enjoy all that our lifestyle has to offer. So there are a few tools that I want to show you today that I use on a daily basis to help buyers visually see what their monthly payment can be. Let's get started. Okay. So the first is I go to Mortgage News Daily. Now, I, as a loan officer, have a ton of pricing options on the back end with all of the different systems that I use. However, that gets really into the weeds. I just want to provide them something that, one, they have access to. Every single person has today's mortgage rates through Mortgage News Daily. And I know that any loan officer they talk to is using a system that is priced with these rates. And so I love using this. It's a great resource. I hope you find that too. If you ever need help using it, give me a call. All right. So a lot of first-time homebuyers use FHA loans. So I want to point your attention to the FHA loan here. Now today, the rate is at 5.99%. Now this is a quote with essentially 0 discount points, meaning it's at par. Now, what I can tell you is that all of these rates are like the best case scenario. And of course, we all have different credit scores and debt to income ratios and the amount that we're able to put down. So this is our starting point. This does not mean that the person they go speak with, whether it be me or another loan officer, is going to quote them this exact. This is just your starting point. Again, we're trying to simplify the home buying process and give them data so they feel empowered to make decisions. That's all we're doing with these tools. Okay, so I know that my 30-year FHA loan is at 5.99, and then my 30-year fixed, which is conventional, is 6.52. So really, let's just round that to 6.5. Those are the two numbers that I'm going to use to run different scenarios. Now, you could use their mortgage calculators. I personally love to jump over to my website at reliancemortgageloans.com. Under resources, we have calculator, but we don't just have one calculator. We have purchasing power, qualifying loan, renting versus buying, refinance, 15 versus 30, buy down. You get where I'm going. So that way, when I'm working with a client, based on their questions, I may flip to another calculator to run the scenarios that we're talking about. But let's just, again, keep it simple. The biggest thing is explaining the difference between a basic monthly payment and an advanced. And I find that this can be a big difference maker. And so it's important for me to explain to you why you should always use the advanced. Because when they get quoted a payment and it's just principal and interest, they set their sights a lot higher. So they're going to start falling in love with homes that they truly can't afford. Because when we get down to the advanced, which is their true number, because their insurance and taxes will be part of their payment, that payment's going to jump, typically by at least $400 on average a month. And so I really like to give higher estimates because I want my clients to feel extremely comfortable and empowered. Now let's jump into the calculator and how it works. So the loan amount. So I'm just starting with $250,000. Now, $250,000 is the amount they are financing. That means the purchase price is actually higher because remember, the difference between the purchase price and the loan amount is the down payment. And all of our buyers, unless they are VA or USDA, are going to have a down payment component. So at a loan amount of $250,000 on a term of 30 years, this is already set up for conventional, that 6.5% that we got from the mortgage rates today. And then you can see I've adjusted the taxes and insurance to be the same. This is just an average depending on the home, how new it is, how old it is, and the client's credit score. The insurance can adjust as well as taxes depending on the county, city, things like that. Now, I do have mortgage insurance in here. That is just assuming that they did not put 20% down. Now, if your client is putting 20% down, we can take this out. and I've assumed this mortgage insurance at $100 a month. So we are at a rough payment over the 30 years of $2,080. So if I had a client that said, Kaila, I've got to be under 2,000, well, I know we're at a good starting point. We can back down from there, and then I have to take into consideration, again, their personal down payment and other factors that are leading into that. So then I can just adjust the loan amount from there. What if our loan amount was $300,000? What would that look like? And that's when we can start to see from what is the difference between $250,000 loan amount and $300,000 loan amount? Same home. But you can see that the difference in payment is about $400. Let's do that again. So $2,080, okay? And then we go up to $2,396. So it's about a $300 difference, really, $316. And so you have to say, how much home? Then you get into the market. You're the real estate professional. Let's look at the homes that we think we can afford with the $250,000 loan amount. And let's look at the homes that we can get with this $300,000 loan amount, assuming you qualify for both. Are we finding anything in this lower price point? If we're not, are we comfortable? Let's look at our budget. How much of our monthly income would be going towards this $2,396 a month? And is it worth that? Especially if the homes are newer and so the overall cost of homeownership is less. That's when we can really start to understand what is driving our client's decision. Is it truly the monthly payment, or are there other extenuating circumstances that we need to consider? Seeing these numbers go up and down can really help the client hone in on the number we need to be focused on. So that way you're looking for homes that are in the right purchase point and you're not wasting your time or the seller's time opening doors that are ultimately not going to fit that client's wallet. If you have any questions about how to use a mortgage calculator, how to understand what's driving mortgage rates, I'm Kaila Parker. If you're in the Pensacola area, I am your local lender. I serve the entire state of Florida and the entire state of Alabama, and I love making mortgage simple and giving you a strategy to build your business on. Please reach out if you have any questions, and remember, affordability is at the forefront of everyone's mind. I hope these simple tools can help you get more buyers off the fence and building wealth faster through homeownership.